laws and regulations in performing audit of financial statement. Non-compliance means act of omission or commission by entity, either intentional or unintentional, which are contrary to prevailing laws or regulations. It does not include personal misconduct unrelated to business activities of entity by management of TCWG or employees. This is the main difference from NOCLAR and SA 250. Responsibility of management for compliance with laws and regulation. Ensure that entities' operations are conducted as per provisions of laws and regulations. Responsibility of management. First one is that entities' operations are conducted as per provisions of laws and regulations. For this, entity may implement following policies, procedures that assist in prevention and detection of non-compliance with laws and regulation. Question. For this, entity may implement following policies and procedures that assist in prevention and detection of non-compliance with laws and regulations. Monitoring legal requirements and ensuring that operating procedures are designed to meet these requirements. Instituting and operating appropriate systems of internal control. Developing, publicizing and following code of conduct. Ensuring employees are properly trained and understand code of ethics, code of conduct. Monitoring compliance with code of conduct. Engaging legal advisors to assist in monitoring legal requirements. Maintaining register of significant laws and regulations and record of compliance. 7 points. Entity may implement following policies and procedures that assist in prevention and detection of non-compliance with laws and regulations. Monitoring legal requirement, internal control, developing code of conduct, employees are properly trained, monitoring compliance with code, engaging legal advisors and maintaining register. Responsibility of auditor in relation to compliance with laws and regulations by entity. Inherent limitations on auditor's ability. In case of laws and regulation, potential effect of inherent limitations on auditor's ability to detect material misstatement are greater due to following reasons. Inherent limitations for auditor's ability. There are many laws and regulations that do not affect financial statement and not captured by entity's information system. Non-compliance may involve conduct designed to conceal it, such as collusion, forgery, or intentional misrepresentation made to auditor. Whether an act constitutes non-compliance is ultimately a matter of legal determination by a court of law. Auditor's responsibility. Responsibilities relating to compliance with those laws and regulations that have a direct effect on determination of material amounts of disclosures in financial statements, that is tax, labor laws, etc. As part of obtaining understanding of entities and its environment, auditor shall obtain a general understanding of legal and regulatory framework applicable to entity and industry in which entity operates, how the entity is complying with that framework. Auditor shall obtain sufficient appropriate audit evidence regarding compliance with those laws and regulations that have direct and material effect on financial statement. Next up, responsibilities relating to other laws and regulations that do not have direct effect on financial statement but their compliance is fundamental to operating aspects of business, that is employment of child labor, environmental regulation, etc. Auditor is not responsible for preventing non-compliance and cannot be expected to detect non-compliance with all laws and regulations. For other laws, auditor's responsibility is limited to identifying non-compliance that may have a material effect on financial statement. Auditor shall perform following audit procedures to identify non-compliance that have material effect on financial statement. Inquiring of management of TCWG whether entity is in compliance with laws or regulation. Inspecting correspondence with regulatory authorities. During audit, auditor shall remain alert to possibility that other audit procedures applied may bring instances of non-compliance to auditor's attention. Auditor shall obtain written representation from management or TCWG that all non-instances of non-compliance have been disclosed to auditor. Indications of non-compliance with the laws and regulations. When auditor has information about following matters, it may be an indication of non-compliance with the laws and regulation. Investigation by regulatory organization and government departments or payments or penalties. Payment for unspecified services to consultants or government employees. Sales commission or agent fees that appear excessive in relation to those ordinarily paid by entity. Purchasing at prices significantly above or below market price. Unusual payment towards legal and retainership fee. Unusual transaction with companies registered in tax havens. Payment of goods or services made other than to the country from which goods or services are originated. Existence of information system which fails by design or accident to provide sufficient evidence. Adverse media comment. Question again. When auditor has information about following matters, it may be an indication of non-compliance with laws and regulation. Indication of non-compliance with laws and regulation. Investigation by regulatory or and government departments. Payment for unspecified services. Sales commission or agent fee excessive in relation to ordinarily paid by entity. Purchasing above or below market price. Legal and retailership fee. Unusual transaction with tax haven entities made other than to country for goods and services originate. Existence of information system which fails to decide or accident to provide sufficient evidence. Adverse media comment. Audit procedures to be followed when non-compliance is identified or suspected. If auditor has information about non-compliance, he shall obtain understanding of nature of act and circumstances in which it has occurred and further information to evaluate the possible effect on financial statement. If auditor suspects non-compliance, he shall discuss matter with management. If they do not provide sufficient information and effect of non-compliance may be material to financial statement, auditor shall consider to obtain legal advice. If sufficient information about suspected non-compliance cannot be obtained, auditor shall evaluate effect on auditor's opinion. Next one, reporting responsibility of auditor for NOCLAR in FS. Reporting of identified or suspected non-compliance. Reporting non-compliance to TCWG. 3 points. Auditor shall communicate TCWG matters involving non-compliance that come to auditor's attention during audit other than when the matters are clearly inconsequential. If non-compliance referred to above is intentional or material, auditor shall communicate the matter to TCWG as soon as practicable. If auditor suspects that management or TCWG are involved in non-compliance, he shall communicate matter to next higher level of authority in entity, such as audit committee or supervisory board. Where no such authority exists, auditor shall consider to obtain legal advice. 3 points. Reporting non-compliance to TCWG. Communicating TCWG non-compliance that come to auditor's attention during audit other than clearly inconsequential. Intentional and material communicate to TCWG as soon as practicable. Management or TCWG are involved in non-compliance, shall communicate matter to next higher level such as audit committee. No such authority exists, obtain legal advice. In reporting non-compliance in auditor's report. If auditor concludes non-compliance has material effect but not reflected in financial statement, he shall express qualified or adverse opinion. If auditor is precluded by management or TCWG from obtaining such audit evidence, evaluate whether non-compliance has occurred, he shall express qualified or disclaimer of opinion on basis of limitation of scope. Reporting non-compliance to regulatory enforcement authority. Auditor shall determine whether he has responsibility to report non-compliance to parties outside entity. SA 260. Communication with TCWG. This essay deals with auditor's responsibility to communicate with TCWG in audit of financial statement. TCWG, person with responsibility for overseeing the strategic direction of entity and obligations related to accountability of entity. TCWG may include management personnel. Person with executive responsibility for conduct of entity's operations. Form and timing of communication. If in auditor's judgment oral communication would not be adequate, he shall communicate in writing with TCWG. Auditor shall communicate with TCWG on a timely basis. Matters to be communicated by auditor to TCWG. Auditor's responsibility relating to financial statement audit. Auditor shall communicate responsibility of auditor in relation to FS that 2 things. Auditor is responsible for forming and expressing an opinion on financial statement that have been prepared by management with the oversight of TCWG. Auditor of financial statement not relieve management or TCWG of their responsibilities. Next one, planned scope and timing of audit. Audit shall communicate with TCWG an overview of planned scope and timing of audit. Last one, significant findings from audit. 3 things are to be communicated by auditor to TCWG. Auditor's responsibility relating to financial statement audit. Then next one is planned scope and timing of audit, and last one is significant findings from audit. Further points of significant findings from audit. Auditor shall communicate with TCWG auditor's view about significant qualitative aspects of entities' accounting practices, including accounting policies, accounting estimates, and financial statement disclosures. Significant difficulties encountered during audit. Unless all TCWG are involved in managing entity, significant matters arising from audit that are discussed with management, written representation where auditor is requesting. Circumstances that affect the form and content of auditor's report. That is going concern, SA 570. Key audit matter, SA 701. Modification SA 705. EOMP OMP SA 706. Uncorrected of material statement of other information SA 720. Other matters arising from audit that in auditor's judgment are significant to oversight of financial reporting process. Significant difficulties encountered during audit. Significant difficulties encountered during audit may include matters such as significant delays by management or unwillingness to provide necessary information, unreasonably brief time within which to complete the audit, extensive unexpected effort required to obtain sufficient appropriate audit evidence, unavailability of expected information, restrictions imposed on auditor by management, management's unwillingness to make assessment of entity's ability to continue as a going concern. Significant difficulties encountered during audit may include matters such as significant delays by management to provide information, unreasonable brief time, extensive unexpected effort, unavailability of expected information, restrictions imposed by auditor, and management unwillingness to make assessment as a going concern. 6 points. Additional communication in case of listed entities regarding independence. In case of listed entities, auditor shall communicate with the TCWG. 3 points. Statement that engagement team and others are firm complied with relevant ethical requirements regarding independence. All relationships and other matters between firm and entity that may affect independence. It includes total fees charged during the period for audit and non-audit services. Related safeguards applied to eliminate identified risks to independence or reduce them to an acceptable level. In case of listed entities, auditor shall communicate with TCWG. 3 points. Statement that engagement team complied with relevant ethical requirements regarding independence. All relationships that may affect independence. Related safeguards to eliminate identified risks to independence.